time now for the trade of the day within the grocery stores sector.
Well, there was some commonality here. I think we're all pretty positive about the scope for these guys to continue doing well. Shoprite, I think, is the one that we started with. It's the largest of the group sector. Much beloved by foreign investors. Its CEO, Whitey Basson, also now much beloved by the market as well. Moving into, so further advanced in terms of the African agenda. Rob, just to throw this to you, they've now gone above the 100 billion market cap mark. They've got some momentum from a recent good trading update. If one was to still be prepared to go long a stock like this, what other catalysts could we look forward to in the next couple of months that could drive this thing higher?
Obviously, if they start carrying on getting the African strategy right, so we start to see growth coming from the African economies. I think also food inflation, we have to see, they've got a lot that they can add on. As I said before, their margins are really low. So I think they, when all the other retailers get squeezed, they can still push their margins up. Obviously, it's very highly priced, but I think on any pullback on the share, and we've had a small pullback, I think it's, I think you can just start to buy it.
At what levels would you be buying when you say a small pullback?
You have to buy it under 180 Rand. I think it's trading around that today, around 180. Yeah. So you're looking, if you can get 170 Rand on that share price, just where you start to see a little bit of support there, that would be a nice entry point. And then you have to close your eyes a little bit on this trade because of the valuations. But the flow is still there. The foreigners haven't started selling on the food retailers by the looks of things. They still like the story. And if it carries on at this rate, anybody that's short in the market in these shares will again get squeezed out, and you'll start to see that'll be another tick up on the upside.
So that actually raises another point. A couple of weeks ago, people were talking about sectoral rotation, and there was this idea that it's time now to, jump off the one bus and jump onto the other. That seems to, though, have worked out badly for those that went short the retailers and got stuck into the mining shares. Not that the mining shares have done all that badly, but what's your view of that? Do you want to play that game? Do you want to match this long with a short somewhere else?
I don't think so. I think that the sector rotation, I think there is a little bit still there, but it's more on the credit retailers and not on the food side. So on the food side, I would be still loath to be shorting the food stocks, the food retailers. So if you wanted to short maybe a credit retailer, clothing retailer against it, yes, maybe you could still do that trade. But just on this trade alone, I think you could probably still carry on buying the food retailers.
And then one just extra factor is, from a macro point of view, I suppose what would also be positive for a trade of this nature would be further news out with regard to credit extension, good Christmas sales generally. Yeah. I remember normally in January they all come out and say how much they've done in terms of sales and turnover. So that could also be something, get in long now in anticipation of a better than expected Christmas festive season.
Yes, I think also people are a bit tight in their pockets and they hold a little bit back, especially now, and they're only going to start shopping over Christmas. So there's a very big boost to that cyclical spend. So you're starting to see it more and more again as the market actually gets tighter. Whereas in the bull markets, people are buying consistently throughout the year. So you might get that spike at the end of the year again, which could be slightly larger than people expect.